What is up, everybody? Welcome back to the Crypto Sherpa live channel, where I read you those crypto news articles so you don't have to. Now, yeah, as the title said, did you get McRugged? Because yes, McDonald's, I forgot who exactly got rugged from it. What happened? What happened? Who was it? Which person? I don't know, but some hacker broke into a McDonald's employee's account and pretty much rugged everybody with this Grimace token. But yeah, that's going to be our first article we're going to cover today. So yes, let's dive right on into it. So first one's coming from Decrypt, and yes, Mcrugged. Hackers take over McDonald's Instagram and make $700,000 on fake Grimace token. The hackers put this Solana meme coin scam in front of some 5 million McDonald's followers before pulling the rug and flaunting their gains. So yes, hopefully you were not a part of that, or maybe you got lucky and made a little gain before they rugged you. But yes, let's go through this article. So, a senior McDonald's employee appeared to suffer a social media hack on Wednesday, one that soon allowed the culprits to promote a short-lived Grimace-themed Solana meme coin scam across the fast food giant's prominent public-facing accounts. Now, late on Wednesday morning, posts on both McDonald's Instagram page, which boasts some 5 million followers, and the personal Twitter account of Senior Marketing Director Guillaume Huin began extolling a new Grimace token. The Solana meme coin was started on popular launcher Pump.fun, and perhaps an unusual choice for a $207 billion company. Now, on Huin's Twitter, posts promised that Grimace holders who listed their Instagram accounts would soon be followed by McDonald's. Now, we love and appreciate all the support of Grimace, one such post read, accompanied by a photo of the ambiguous purple character along with the Ronald McDonald donning a protective face shield. And it should have been the McBurglar out there, but if it was, people probably would have caught on that it was a scam. But here is a tweet from Juliana Hune and his Twitter account. If you're a holder of Grimace, drop your Instagram handles below. We will follow you and on the official McDonald's account. We love and appreciate you. And this was the photo they used? Come on. Now, as often seen in the meme coin scams tied to hacked brands or celebrity social media accounts, the price of Grimace surged on obscene 195,000% within minutes before its deployers rugged the token's liquidity instantly, collapsing the token's value back to zero. So I don't really think anybody was able to get on that bandwagon fast enough. So, but in case the jarring succession of events left room for any ambiguity, the hacker then returned to McDonald's Instagram account, where they changed the company's bio to read, "You have just been rug pulled," adding, "Thank you for the $700,000 in Solana." That's really painful. Now, blockchain data visualization startup Bubble Maps wrote on Twitter that the hacker apparently used numerous addresses to purchase the vast majority of tokens on Pump.fun ahead of the price spike, approximately 75% of the supply, and then distributed them into approximately 100 wallets before selling them all for approximately $700,000. The Bubble Maps tweet showed him hacker owned 75% of the supply and then used multiple addresses to buy on the pump fund simultaneously. So that's how they did it. Now, McDonald's is shilling a Solana token on Instagram. The account is presumably hacked from DGen News. So yeah, people were forewarning them. But the ragtag group of digital bandits who appear to have styled themselves the India X Crew also linked to a Telegram group in the Instagram bio. At writing, they have only thus far used the group to post the music video for the 2016 Juicy J song Blue Bentley, in which the artist repeatedly celebrates having just cashed out. Remarkably, despite what one might consider to be a healthy dollop of red flags, the Grimace token accumulated over $20 million in trading volume in less than 2 hours. Now, this can sometimes happen when crypto traders, fully aware that the token is a scam, try to get in on the rug and cash out before the token crashes to be worthless. Now, this is an incredibly risky strategy that often backfires. Now, it appears that McDonald's finally recovered control of its Instagram account over an hour after the hackers first posted about the Grimace token, and the company wiped all posts related to the meme coin, but did not immediately respond to Decrypt's request for a comment on the matter. Now, I would like to order one McRug with extra potatoes, please, says the @McDonald's #Grimace. Now, the short-lived saga underscores how easily hackers can gain access to and profit from even tightly guarded corporate social media accounts by identifying even one point of weakness in a single employee's online security. Now, in recent months, hackers have used similar tactics to launch fake tokens from accounts of Sydney Sweeney, Doja Cat, and 50 Cent, among other celebrities. Now, McDonald's, interestingly enough, have pursued multiple official initiatives across the crypto world in recent years, including the McRib NFT collectibles, Grimace NFTs, tied to a metaverse world, and a McNuggets land setting an Ethereum game, The Sandbox. So yeah, this isn't the first time McDonald's dipped into these projects. Like the most noticeable recent one was this one, the McNuggets land. I believe I covered an article about that. I don't recall the McRib NFT or the Grimace one. Is this the one that just got rugged? No, these are NFTs, not tokens. So, but yeah, I do not remember these two NFTs that came out, but the McNuggets land, I do remember. So yeah, that is the first the article. So hopefully you didn't get rugged on it, or hopefully you didn't try to attempt it, because if not, this guy's looking down on you. You just got away with your burgers. But yeah, so if you did happen to chase that wave, or not that wave, you happen to try to chase the scam, because again, it is a tactic out there, but it's very, very risky to do so, because you're trying to beat the scam before the scammer pulls it out on you. So I would never recommend doing that. But yeah, hopefully none of you are a part of this hack out there and want to jump on into it, because now it's got some good eyes on it. It's like, oh, a lot of people are nosing it. Maybe I can get in now. It's done. It's a rug pull project. Don't do it. Don't get involved. But that was our first article we have for you. Let's move on to our next one. What else do I got for you? Well, let's see. This one's coming from Crypto Potato, and Brazilian regulator grants approval for the second Solana ETF in the country. Now, let me, hold on. I always got to keep deleting these pop-up ads, because they are most likely scams out there that I don't want you guys to see or click on. So yeah, it looks like there is another Solana ETF happening in the country, which is pretty cool. Will it happen in America? I don't think so. I don't think we even need one. But no, like ETFs are happening all over the world. So just because one gets approved in another country doesn't mean it will happen in the US, but you never know still. But yeah, let's go through this article. Brazil will have a second Solana ETF shortly after its first on August 8th. While the US might not see such a financial vehicle soon, the Brazilian Securities and Exchange Commission has greenlighted a second Solana exchange-traded fund weeks after it approved its first one on August 8th. Now, according to the CVM central database, the product will be launched by Hashdex, an asset manager based in Brazil, in collaboration with the local investment bank BTG Pactual. Now, Brazil's second Solana ETF, however, the newly approved Solana ETF remains in a pre-operational phase. Hashdex manages over $962 million in assets and has a history of launching innovative products on the B3 Brazilian stock exchange. Now, the company has previously introduced ETFs based on the NASDAQ crypto index, as well as Bitcoin and Ethereum. This development comes just weeks after the CVM confirmed Brazil's first Solana ETF on August 8th, which is offered by QR Asset, another local asset manager. Now, the timing of the CVM's decision coincides with ongoing speculation about the Solana ETF situation in the US. Earlier this year, the Securities and Exchange Commission approved a spot Bitcoin ETF in January and a spot Ether ETF in June, causing optimism for Solana could be in line, but I don't think they ever did with it. But several prominent asset managers, including Bannock and Franklin Templeton, have expressed interest in launching Solana ETFs, but I believe the only big one that matters is if BlackRock wants it. But let's go over more about the US Solana ETF approvals. However, recent developments have cast a doubt on the likelihood of such approvals in the near term. Filings for Solana ETFs, known as 19B-4 forms, were recently removed from the Chicago Board Options Exchange website and had not been added to the Federal Register, leading to speculation about the future of these products in the country. Now, on August 20th, Bloomberg ETF analyst Eric Bashunas highlighted in an X post that the 19B-4 forms submitted by CBOE were not acknowledged by the SEC, and as a result, the Chicago Board Options Exchange withdrew these forms through the S1 filings, but the issuers remain inactive. Now, the S1 form is a crucial part of the SEC's approval process, enabling issuers to offer the new securities publicly. However, it cannot advance without the 19B-4 filing, so pretty much at a stalemate. Now, Nate Geraci, president of the ETF store, views these developments as strong indications that the ETF is unlikely to receive the green light soon under the current legislation. Now, when asked about the possibility of such an ETF this year, Balchunas responded, yes, near zero chance in 2024, and if Harris wins, there's probably near zero chance in 2025 too. Only hope, in my opinion, is if Trump wins. Now, despite these challenges, Van Eck remains committed to its Solana ETF proposal, with Matthew Siegel, the company's head of digital assets research, clarifying that the removal of the filings does not mark the end of its ambitions, so they're going to keep pushing it. But again, with the current regulations, and if Harris got in, that's a big if because I doubt it. But then maybe they can push through forward. But we'll see. Again, I don't think we really need it. We already got Bitcoin and Ethereum ETFs. If they just keep adding, it kind of just seems pointless to do. But yeah, let them do what they want. If people want indirect exposure to cryptocurrencies, fine, go for it. But we all know, you and me, the best way to be involved with cryptos is just actually hold on to it yourself. So yeah, that's the Brazil though gets a second Solana ETF. So way to go, Brazil! Well, I think this article covered more about the U.S. and not that one. So, but yeah, way to go, Brazil on that. But yeah, so that is that Solana ETF news for you. Let's move on. What else do I have for you? Let's see. Oh, this one's coming out of Cointelegraph and looks like India's crypto future hinges on government's consultation paper. Let me zoom in a little bit so we can all read this together. India's Department of Economic Affairs consultation paper is expected to be a watershed moment for crypto regulation, and the country is potentially setting the stage for future legislation. Now, India's cryptocurrency landscape could be about to change as the Department of Economic Affairs prepares a key consultation paper on cryptocurrency legislation. According to local media, the paper, which is expected in September or October, will invite feedback from various stakeholders, with the government playing an active role in the direction of digital currencies in India. Now, India's crypto conundrum. The paper, led by a panel chaired by the Secretary of the DEA, represents a significant step in India's ongoing efforts to balance innovation and regulation in its rapidly evolving crypto sector. Now, the release comes at a time when global scrutiny of the cryptocurrencies is intensifying, particularly in light of the G20 nations' unified approach to regulation. As highlighted by India's Financial Minister Nirmala Sitharaman at the meeting of the Group of Nations in October 23, India, which has already implemented a stringent tax regime on cryptocurrency taxation, has taken a cautious approach to regulation. The 30% tax on unrealized crypto gains and 1% tax deducted at the source, implemented in April 22, marked the government's first major move toward imposing some control over the crypto market. However, despite these measures, the Indian government has refrained from regulating the sale and purchases of cryptocurrencies, focusing instead on curbing crypto-related money laundering and terrorism financing. Now, the DEA paper to address regulatory concerns. The forthcoming paper is expected to address the broader concerns surrounding the regulation of crypto assets, including those raised by Securities and Exchange Board of India and the Reserve Bank of India. In May, the SCBI suggested a multi-regulatory approach wherein different aspects of the cryptocurrency trading would be overseen by various financial authorities. This fragmented approach underscores the complexity of regulating a technology that crosses traditional financial boundaries and poses unique challenges. Now, on the other hand, the RBI has consistently warned of the central macroeconomics risks posed by digital currencies, and the central bank's stance reflects deep concerns about the potential impact of cryptocurrencies on India's economic stability. Now, this caution is mirrored in the government's recent actions against offshore crypto platforms and digital asset service providers, including a high-profile ban on Binance, the world's largest cryptocurrency exchange. Despite this, Binance still managed to reestablish its presence in India by registering with the Financial Intelligence Unit, even as it faces a hefty $86 million tax demand from Indian authorities. So yeah, even though Binance got kicked out from their stringent rules, we just covered that recently that they did just get back in because they registered with the Financial Intelligence Agency Unit. So yeah, we'll see how this DEA paper goes, and will it change? No. They've been always so strict on it. I never really covered a good article from India, so we're just have to wait and see how they do. And yeah, we're going to get more and more articles like this from around the world, because crypto is now, it's the mainstream. The narratives change. Around the world, yes, there was a lot more adoption than the U.S., but it feels like once the U.S. got involved, bam, like everything changed. So yeah, we'll keep you updated on this when more news comes out from it. So that is the India's crypto future news. Let's move on. Yep, looks like some coins out there are going to be looked as securities. So this one's coming from CoinDesk and controversial crypto firm Prometheum to treat Uniswap and Arbitron tokens as securities. The SEC registered crypto platform is expanding its custody operation beyond Ethereum's ETH, and that means it would be holding Uni and ARB as securities. So, interesting. Let's go through this article and learn a bit about this. So, registered security firms Prometheum intends to take custody of customers' Uni and ARB as securities when it gets rolling, adding them to its existing plans for Ethereum's Ether. Now, while crypto industry fights the Securities and Exchange Commission stance on tokens as securities, Prometheum is still seeking a road to comply with agency views. The company intends to open its custodial doors in earliest September, and Prometheum is forging ahead with a strategy to comply with the U.S. Securities and Exchange Commission view on cryptocurrency transactions by letting 2 more tokens into its custody operation for crypto securities. Whether the rest of the industry agrees or not, the U.S. firm's custodial business will accept tokens issued by Uniswap and Arbitron. Yeah, let me take away that ad. Oop, now wait, did I miss it? There we go. Now, in addition to its earlier announcement, it would custody Ethereum's Ether as well, and the company's officials told CoinDesk treating these tokens as securities is meant to put Prometheum in line with what the SEC insists is the law for U.S. digital asset transactions. Now, that the vast majority of tokens should be treated as securities under the agency's jurisdiction, Prometheum Capital views the federal securities laws as the regulatory framework that provides established and tried and tested investor protections, said Benjamin Kaplan, the CEO of subsidiary Prometheum Capital. In an emailed response to questions providing a regulated mechanism to allow investors to responsibly participate in the digital asset space, it has always been our goal. Now, as the firm moves toward fully opening its doors to institutional customers by the end of next month, according to its own estimate, much of the industry is battling the SEC and federal courts, and some of the more prominent U.S. crypto firms are arguing with occasional success that the digital assets shouldn't necessarily be treated as investment contracts and that count as securities. Bitcoin is well established as a commodity, for instance, which leaves it outside the SEC's reach. Now, Prometheum is a unique creature in the industry because it's the first and only company to set up formally as a special purpose broker-dealer for crypto assets. It's registered as a custodian and to clear and settle digital asset trades. Company officials' past predictions for when it would become a one-stop shop for crypto transactions have proven overly optimistic, and Kaplan is now only willing to say that'll happen sometime after the full launch of its custodial offering. Now, the company's stance that the SEC is correct puts it at odds with most of its counterparts in the sector. SEC Gary Gensler has more than once referred to the company as a potential example of crypto done correctly so far. Now, the regulator hasn't openly pushed back on Prometheum's business model, but the firm has only proceeded to date with a soft launch in May through Kaplan, and they wouldn't offer details about what that meant and whether the company is earning revenue or not. He also declined to say whether the company has received any reinforcement from the SEC about its business model, only that it engaged with the regulator in the normal course of business. Now, if institutional customers do knock on the door later this year, the company contends that the type of blockchain-backed custody it's offering is more transparent and saves the cost of intermediaries, such as transfer agents. Now, its earlier announcement about custody ETH for clients raised questions among some of the company's critics, and Commodity Futures Trading Commission Chairman Rawson Beckham acknowledged in a congressional hearing that a securities firm handling ETH could run afoul of his agency's decision to treat the token as a commodity. Now, the SEC has signaled that Uni may be a security as well. When it threatened an enforcement action, Uniswap Labs contended the arguments for Uni being a security are unfounded. The SEC's aggressive theories are an effort to expand its jurisdiction beyond exchanges to communications technology and beyond securities to all markets. Their legal arguments are weak and have been refuted by courts, and the Uniswap Labs argued in a May blog post. Now, ARB is a native token to the Arbitron network billed as a faster and cheaper blockchain for transacting on Ethereum. Now, when asked why Prometheum selected Uni and ARB, Kaplan responded that Prometheum Capital just intends to provide investors access to the top digital assets over time, as well as tokenized assets, debt, equities, exchange-traded funds, mutual funds, options, money market funds, and other investment contracts and products that are issued and transferred on a blockchain. So yeah, it's like not just why they're doing it. They're just trying to add more stuff to it. They did say that back then. So I remember when they put Ethereum on their books, I did cover that article. But it just said like, yeah, over time we are going to add more stuff to it. So yeah, so it may be controversial, but yeah, they're going to be adding it. And that's the Prometheum news for you. Let's move on. What else do I have for you? I think I have a couple articles still. 1, 2, 3, 4, 5. I think I got about 4 more articles. Now, this next one is another company expanding its blockchain fund, and that is Franklin Templeton, and how it expands its blockchain fund to the Avalanche network. The Wall Street Titans money market fund is now available on the crypto network behind AVAX. So, pretty some good news for AVAX out there. Leading asset manager Franklin Templeton, NASDAQ-listed on-chain U.S. government money fund, is now available on Avalanche and Wall Street. Now, the Wall Street giant said on Thursday that the institutional investors can allocate to the fund through a digital wallet on its Benji Investments platform, and they can also keep their wallets on the Avalanche network upon request and subject to eligibility. Now, Avalanche is the blockchain behind the 14th biggest cryptocurrency by market cap, and AVAX, its network, is used to build decentralized apps such as decentralized finance products, and it aims to compete with Ethereum. Bringing the Benji platform to the Avalanche network further expands access to our first of its kind tokenized money market fund. Franklin Templeton's head of digital assets, Roger Baston, said that FobXX is a digitized fund that lets customers put cash into U.S. government securities and cash and repurchase agreements. Investors can buy shares of the FOBXX and hold them in digital wallets via Franklin Templeton's Benji Investment mobile app. Now, just last week, Franklin Templeton announced the FOBXX's compatibility on the Arbitron network and Ethereum scaling solution. Now, this is the latest move by traditional finance titan in the world of crypto. Franklin Templeton is one of many high-profile Wall Street giants that launched a spot Bitcoin ETF and later an Ethereum ETF this year. Now, both have been hugely successful, but the firm first dipped its toes in blockchain space back in 2018 when it started digitizing shares from money market funds on the Stellar blockchain. Then in 2021 announced a digital asset venture fund. Now, this article, I know I did not cover because I only got into crypto in like the end of 2020, beginning of 2021. So I don't even think I covered that. I think my crypto YouTube journey started in 2021 too. But no, so yeah, this is kind of new news then to me out there. But yeah, so Franklin Templeton is just expanding its network. So pretty cool. So yeah, that's that. I think now we're finally out. For me, I consider all these pretty boring news articles. Kind of exciting, but no, like now we're getting into the fun stuff. So let's go on to our next one. And there's always a mosquito in this office that keeps biting me, and I hate it. Let me take off this little ad front again. But yeah, looks like Shiba Inu is in the news. Yeah, Shiba Inu reveals its release for its scheduled first Shibarium-based Web3 game. So are you guys going to play that Web3 game? Do you hold Shibarium? I don't, but let me know in the comments down below if you will. But the Shiba Inu ecosystem has taken a significant step forward with the introduction of a closed beta version of Shiba Inu's Eternity, its first game built on the Shibarium blockchain. Lucy, the Shiba Inu marketing lead, detailed the release schedule and features of the game in comprehensive announcements on X today, marking a pivotal moment for the popular meme coin's transition into a more utility-based ecosystem. Now, Shiba Inu gets its first Shibarium-based game. Lucy's announcement details a complete overhaul from the game's previous iteration, Attention Leash Stackers. Closed beta for Shiba Eternity is live, but this isn't just the old game with a few updates. It's a complete shift to Web3 with significant upgrades, Lucy revealed. Now, the game now operates on the Shibarium mainnet, which supports non-fungible tokens, and this integration allows for a decentralized gaming experience, with players' inventory cards being represented as NFTs, thus ensuring verifiable ownership and tradability within the ecosystem. Now, the game's core architecture is now based on Shibarium's blockchain. The shift allows for a seamless and secure gaming experience utilizing blockchain technology for asset management and in-game transactions. Moreover, Shiba Eternity introduces a competitive ranked mode where players engage in a 15-day tournament. Ranking in these tournaments are determined by players' performances and with the rewards distributed based on their final standings. Now, exclusive tournaments are available for the top 25 players from the ranked mode, featuring seasonal events that offer unique rewards. Now, notably, the game has overall undergone significant refinements, including an updated tutorial and a polished menu interface, streamlined armory management, and smoother overall performance. The new reward system offers improved quests, faster progression through the game, and special welcome gifts for players transitioning from Web 2 versions of the game. Now, the release schedule for this is the initial access to Shiba Eternity's closed beta was granted today on August 21st, exclusively to those who have staked leash tokens. Now, these participants can connect their smart wallets via the Shiba Swap to engage with the game, and this early access phase is critical for gathering users' feedback and ensuring stability before a wider release happens. Now, following this, on September 5th, access will be expanded to include holders of specific NFTs within the Shiba Inu ecosystem, namely the Shiboshis and the Shiba Eternity Lore Collection. A release for an open beta has yet to be announced, and no leash or NFTs, no worries. The open beta is on the way, giving everyone a chance to enter the Dogjo. Lucy stated, Dogjo. Like Dojo, but Dogjo. That made me chuckle. But Lucy also issued a security warning and emphasized the importance of vigilance against scams. Beware scams, only connect your wallet through official platforms. Never click on links from unknown sources on X or elsewhere. Always manually enter the official website address and double check before connecting your wallet. So yeah, I'm glad they threw that in there just for warning people to be careful, and also be on high alert for even if you're clicking on official leaks, just be aware that sometimes a vulnerability is in there and the account gets hacked and a fake post gets happened. We just saw that with the Grimace NFT and how people got Mcrugged. So yeah, so be careful out there, guys. And so that's the Shiba Inu's game release going on for you. Hope you enjoyed. Let's move on to another article. Now, this one's coming from Cointelegraph, and telecom company fined $1 million for a role in Biden deepfake scams. The Biden deepfake scam highlights the risk of emerging tech and the challenges to safeguard the elections. So lots of AI scams are going to be going on. But the Texas-based telecommunications company, Lingo Telecom, has been hit with a $1 million fine by the United States Federal Communications Commission for its involvement in the illegal Biden deepfake scam. Now, the scam involved using an artificial intelligence-generated recording of President Joe Biden's voice, which was then spread via robocalls to discourage people from voting in the New Hampshire primary election. Now, FCC's crackdown. According to a press release by the FCC, the $1 million fine is not merely a punitive measure, but also a step toward holding telecommunication companies accountable for the content they allow to be disseminated through their networks. Now, in addition, the monetary penalty, Lingo Telecom, has been ordered to implement what the FCC describes as a historic compliance plan. Now, this plan includes strict adherence to the FCC's caller ID authentication rules, which are designed to prevent the kind of fraud and deception that occurred in this case. Moreover, Lingo Telecom must now follow the Know Your Customer and Know Your Upstream Provider principles. It's the first time I ever heard Know Your Upstream, so KYUP. But these are crucial in enabling phone calls to monitor call traffic effectively and ensure that all calls are properly authenticated. Now, dangers to the democratic process. The robocalls orchestrated by political consultant Steve Kramer were a part of a broader effort to interfere with the New Hampshire primary election by utilizing AI technology to create a convincing imitation of Biden's voice, and the calls sought to manipulate the intimidate voters, undermining the democratic process. Kramer was indicted over his role in launching the robocalls on May 23rd, and Kramer, who was working for a rival candidate, Dean Phillips, was indicted for impersonating a candidate during a New Hampshire's Democratic Party primary election. Now, the use of deepfake technologies in the scam is especially concerning as it marks a new and troubling development in the ongoing fight against disinformation. Deepfakes, which utilize AI to generate highly realistic yet fraudulent audio or video recordings, present a serious threat to the integrity of democratic processes. Now, in March, Cointelegraph shed light on the growing issue of AI-created deepfakes in the ongoing election cycle, underscoring the critical need for voters to distinguish between fact and fiction. Now, in February, a group of 20 leading AI technology firms committed to ensuring their software would not be used to impact electoral outcomes. So just be on the alert for AI scams out there. Like, again, I share these articles so that way you don't fall for them. Like, Biden is not calling you, Elon Musk is not calling you, Trump's not calling you, I'm not calling you, the Bitcoin Man Crypto Club's not calling you. Just be careful out there for those scams. So yeah, so that was that one, and they were just fine. Yeah, it kind of is like a slap on the wrist. $1 million, that's nothing, but hopefully it's a start. So yeah, I guess to hold them more accountable for it. So yeah, because like, what was that phrase they said? It was know your. What is that saying? I want to know again. Know your something public things. It was in the article. You heard me read and say it. But yeah, so that was the telecom company fined for its company on the AI scheme. All right, now we got about one more article for you, and usually this doesn't happen in this space, but a scammer was caught 4 years later. But yeah, it was a couple of years later that he's been gone or hiding away after a scam. But no, a fraudster who defrauded investors of $4 billion was caught in Turkey. A fraudster who has been wanted for years for defrauding investors of $4 billion was caught in Turkey after changing his name. So I wonder, how do they do that? Andreas Sagax, one of the founders of the controversial cryptocurrency company Omega Pro, was arrested in Turkey in July for allegedly running a pyramid scheme that defrauded investors of $4 billion, according to multiple reports in the Turkish press. Now, originally from Sweden, Sagax reportedly changed his name from Emre Avici after becoming a Turkish citizen. He denied the accusations, claiming that he only worked in finance and marketing. Now, the arrest followed a tip-off from an anonymous informant on June 28th following raids on two villas in the Beykoz district of Istanbul. Sachs, who was detained on July 9th and arrested on July 10th on charges of fraud using information systems, banks, or credit institutions as means. Now, during the raids, Turkish authorities seized computers and 32 cold wallets, which are typically used to store cryptocurrencies offline. Now, although Sachs reportedly did not provide the passwords, investigators were able to track the movement of a total of $160 million in cryptocurrencies. Now, Omega Pro's collapse in late 2022, which coincided with the collapse of cryptocurrency exchange FTX, left many investors around the world in financial ruin. Now, a key witness in this case, Dutch national Abdul Jafar Mohagahi, told investigators that he lost $7 million in the fraud scheme, and Mohagahi also claimed that to have represented the power of attorney 3,000 affected investors who lost $103 million in the alleged fraud. Now, again, that's to say it's not investment advice, but of course it's not. But yeah, so that was a short article. I thought there was going to be more to it when I clicked on it. But no, so yeah, usually when a scammer gets away with stuff, they don't usually get caught and the money's gone forever. But yeah, so luckily this guy was taken away, and hopefully they can distribute some of that lost crypto back to its users. But that is all the news articles I have for you today. Let's take a look at the Fear and Greed Index. We are still moving up. We are at 50, right in the neutral. So again, as we get closer, people get a little bit greedier. We may be due for a correction again. Like we've been seeing that like this entire past month. Like, oh, we're getting greedy. And then we drop back down to 59,000. Then we get in the fear territory. Now we're back above 60,000. So we'll see what happens here. But Bitcoin's currently sitting at a price of $60,591. Ethereum's at 26. Solana's 142. Toncoin's 651, and Doge is at 10 cents. But yeah, again, that is all the news I have for you, and hopefully you did not get Mcrugged like that first article I covered today. But yeah, I will be back again tomorrow with some more crypto news articles for you. And yeah, I'm going to be now separating all these videos so you don't have to rewatch the full video if you missed one. So I hope you guys have a fantastic rest of your day. And until next time, the Crypto Sherpa is out.